Hey everyone, Jesse here. Hey, I just want to bring something to light to you. It's something that's been on my mind here. Looking into the rally of the end of the year, been noticing a lot of the stocks, obviously all-time high. You look at the S&P, look at the NASDAQ, look at the Dow. All these things are running at all-time highs. Apple, Amazon, that's obviously S&P more. So, but again, large caps are they're rallying right now. And large caps are anything, I believe it's over $10 billion. So if it's over $10 billion, that's considered a large cap. Medium caps would be somewhere around 2 billion to 10 billion, somewhere in between there. And then small caps is anything below 2 billion. So I just kind of want to bring something to light. Something about small caps. So you look at the last 90 days, last quarter of the year, obviously we're seeing all-time highs for these large cap stocks. They're rallying, and it makes sense because, the Christmas holidays are around. Typically that's where you're going to have your biggest, that's the companies that are going to make the most money. So you got Walmart, Amazon, a lot of retailers out, that are just leading the way right now. And it makes sense. A lot of people buying for Christmas time. Also, you look at things like Ford. So Ford has been up about 40% in the last 90 days as well. Also, a side note from that. Ford, since I've recommended it as a buy, is up over 80%. Just a little side note. Not saying that I get all these right, but again, it is one that I highly recommended. So take that as you will. But definitely not saying that all stocks that are small caps are doing bad, and definitely not saying all large caps are doing well. You look at Carnival Cruise Line, for instance. They've kind of been on a rocky start with all the, the virus concerns, the new variant, all those kind of things. But, and that's just one of them. American Airlines, all the airlines, stuff like that. That's just, they haven't been rallying near as much. And those are all large caps. So I just see a big, possibly rotation coming here really, really soon. I see that happening hopefully here in the next month. Could be a little bit longer. Could be in about the next 2 months. A lot of these small caps just got beat up. I mean, my goodness. I own quite a bit of small cap stocks. I also own large, quite a few large as well. But I'd say about 60% of my portfolio is in smaller caps, and they've just gotten beaten up the last 90 days, that is. And they're just keep on getting whacked and whacked and whacked. And I think they've just gotten beat up so much that there's going to be a nice rotation from these larger caps to the smaller caps. And I see that as a big buying opportunity right now. Definitely not financial advice. Just take it as you will. But I believe hedge funds right now have been selling out of small caps. That's what I'm seeing. They're shorting these stocks, and just buying up larger caps with all the cash that they've made. Again, mostly retail. It seems like, Tesla is kind of one of those that, not really retail, but they're also growing, opening up a bunch of, new gigafactories, those kind of things. But again, I do believe there's going to be a rotation, and I do believe it's going to be soon. I want to talk about two different ones that I really, really am bullish on. So I'm bullish on Reits. And I'm also really, really bullish on growth stocks for the EV sector. Those are the two things that I really think are going to do well probably next year. I do believe, though, if the Fed does raise rates more than twice, I do believe that could be a problem for the growth stocks on my smaller caps. Now, the larger caps, I do believe that they're going to do well. So like Ford may have a slight drop, but most likely I believe they're going to rally. And right now I'm just seeing a lot of dirt cheap PE ratios. I know that doesn't mean everything, but whenever you start going to averages, start looking at these larger caps and their PE ratios are just so crazy. I don't know. They're so expensive right now. And that's not just me saying. There's a lot of analysts out there saying that as well. Compared to GDP and these ratios, it's never been really higher. But now I do understand that we have printed off over $9 trillion in the last 2 years. So that could be part of it as well. So that's something to consider as well. A lot of people just going straight to the stock market with all these zero interest. Housing market, obviously we're seeing a huge boom in that. And that's where REITs come in. I believe that REITs are going to really benefit. And I believe the economy's strong enough right now that they're going to be able to hold those higher interest rates, plus keep those equities high. So I think that's going to be bullish for REITs. Be paying cheaper interest while still holding that same value, raising a lot of rent. Rent prices are going to go up. And we're already seeing that. And I believe that CPI is going to be starting to see that rotation up. And I believe that's inflation is just probably going to get a little worse. And REITs will be able to pay a little bit higher dividend then. Now, REITs did get whacked kind of through this whole coronavirus thing. A lot of businesses shut down, obviously. But they're coming back now. And we're starting to see many, many businesses. I mean, obviously, businesses are booming right now. We have over 11 million jobs out, and really only about 7 million people to fill those. So we've got quite a shortage of people, and it's really showing. You just go out anywhere, and you see it. Now hiring signs just everywhere. I think that's just going to be huge for REITs. Now, obviously, whenever they do raise interest rates, that's going to kind of hurt those small cap growth stocks that I was talking about. It's just going to be more expensive to borrow money with higher interest. So I do see that being a slight problem, but I do believe that's going to be kind of more at the end of the year. Now, if you look at their dot plot, I don't know if everybody knows exactly what I'm talking about there, but in 2022, the Fed is supposed to raise interest rates 3 times, but a lot of Wall Street analysts are only predicting 2 rate increases, just because of uncertainty in the economy. Is there going to be a new variant of the virus going around? Is it going to be, are we going to start seeing an uptick in hospitals? What are we going to be seeing? I do believe that everyone agrees that the taper should be basically done already. And the Fed will be done in March. And I think that's bullish. I really do. I think that's just gonna be good, especially for my REITs. But these growth stocks as well, they're ready to, they're just cheap, and I believe that they're going to be making big moves all throughout next year. Now again, like I said, if they do raise that 3rd time for interest rates, I do believe that's going to hurt them quite a bit. And like I said, it's just because it's going to be more expensive to borrow money. Less investments, less hiring, that kind of thing. But they're just so undervalued right now. I just see a great buying opportunity. I think there's going to be a good rotation. So I do want to recommend a couple stocks. And obviously this is not financial advice. A lot of these are actually high risk, fairly high reward. Now I do believe my REITs, those, besides one that I'm going to talk about, I do believe that they're fairly safe. But these growth stocks could be fairly high risk, and I want to talk about those right now. So the first growth stock that I want to talk about, pretty small cap right here. This is a pretty small company. They're called Idenomics, and their ticker symbol IDEX. Very, very, very high potential company. Also very high risk. They have a lot going. They have 12 different companies that they own. 2 of them right now are only making money. I know that sounds really kind of scary, but in the future, you look at this company, look at the future kind of where the market's going, this company is heavy into EV. That's mostly what they're going to be doing. They're going to be building electric buses, electric motorcycles, and then also electric vehicles, electric, fleet vans, those kind of things. This company does it all. I think they're going to be huge. This is just something that I don't know, and there's a lot of speculation over it. This could also blow up. The EV sector could take a lot longer than what we expect, which I do believe could wane on this company. But I also believe you look at EV stocks like Tesla. Yes, Tesla does other things too, but this company does a lot of different kind of stuff too. And I think it's going to really, really benefit them in the long run. I am very bullish on this company about 5 years down the road. I'm just trying to get in early on this company. I think it's going to be a big one for me. A while back, I bought Plug Power in 2020. Held on to that, doubled my money, and then whenever it hit about $8, sold out just because I thought it was overvalued, and I didn't really see, I just thought it was overvalued at that point. Obviously, I was a little bit newer, didn't know exactly, but now obviously Plug Power, they ran up all the way up to like $75 a share. So yeah, that one hurt. But okay, so another one that I want to recommend is Nikola. And I don't know if a lot of people know, but Nikola definitely just got out of a SEC filing. They're paying a huge penalty because their former CEO pretty well just flat out lied about kind of where they were at, what they were building, how far along they were. But they did just deliver their first truck about a week later after that SEC filing. They're going to be paying $125 million over the next 3 years this fine. So yes, going to be burning up quite a bit of cash, but I do believe, again, about the 5 years down the road, this company could be huge, and I see them really taking off. Building a factory out there in Arizona. I know it's been slower because of all this SEC filings, just kind of a disaster. But they did finally get that first truck out there. So that was good to see. And they ran up fairly high, but now obviously getting beat up again. Just that end of the year sell-off. I'm telling you, these hedge funds they're beating them up. And I believe they're going to jump right back in here real shortly. I see it here in the next month or two. Another one that I want to talk about is actually a retail. So the Honest Company. Really like the growth of this company as well. I believe they're going to be, they're in Target. I do know that. I know a lot of people that like their products. Have personally used them as well with kids. Seem to work really well. Just natural, it's just natural wipes, natural diapers. So you don't have all those products in it. So it's a great company, and I see it, and it's just gotten beat up. I mean, when this thing IPO'd just a little over a year ago, this thing was running around $21, $22 a share, getting just beat up, and it's down below $8 a share right now. I'm going to be really buying that one here real shortly. I like the trajectory of that company. I know their sales right now are a little low, but I do believe this is going to come back once we kind of get this shipping supply and demand kind of figured out. Obviously, we know that a lot of people are running out of products. All these companies are having that problem, so it's really hurting them. And obviously, the larger caps are able to recover a lot quicker than the smaller caps from that. We know that. And another one, EV sector. This is strictly mostly fleet vans, and they're called Workhorse, and their ticker symbol is WKHS. So just a while back, probably about it's actually been a little bit longer now, probably about 9 months ago. This was supposed to be a company that was supposed to be getting a USPS contract. Now they ran up very, very high on speculation. Nothing was announced, but a lot of congressmen did say that they were going to be giving it to an EV sector. this was the one that was leading. They were a leading candidate for that. It's supposed to go all electric. That's what this company does. But I see a huge demand for fleet vans over the next several years, and I think this company is going to be big. Again, this is like a 5-year hold for me. I think they're going to be big. I think they've got a lot of, go online, look them up, see what they've got, see what you think. I like them and good ratings so far. These are just growth stocks that I'm really bullish on. Those are the last of the growth companies that I'm seeing. Now, I'm going to go with Reits. And Reits, I've got 2 of them that I'm going to be buying up quite a bit that have kind of gotten beat up. One of them has been fairly flat. I like the trajectory of where they're going. And then one is very, very speculation. And I think with the recovery, they're going to do just fine. But again, this is a lot higher risk. The second one that I'm going to recommend. So the safer one that I'm going to recommend is Mfa Financial, just ticker symbol MFA. And if you look at this company, they've got a fairly good valuation right now. I think they're they're really close to that kind of medium cap. They're getting really close to $2 billion. Might actually be over that now. But their market cap is around $2 billion. Really like the trajectory of this company. They're recovering very nicely. They've got more and more government-backed loans, and through the pandemic, that was one of the big things that they did not do. They didn't have a lot of government-backed loans. When the economy's just soaring like it was in 2019, all the way into 2020 until we hit about February, March. All of a sudden this company just started, going down to the toilet because, they just didn't have a lot of government-backed securities. So this company is rebuilding. They're rebuilding right. Love the trajectory of this company. So if, a big crash does happen again, they're going to be much more prepared. They're going to have mortgage-backed securities. All these things, they're going to be doing good if there's something else that happens. Now, their yield is just under 9%, which is fairly high, but REITs typically do pay a little higher yield. That's normal, especially smaller cap. It's just to bring in investors. They have to pay out 90% of their revenue. So, again, that's kind of a problem with REITs. They don't grow quite as quick just because a lot of their cash is just given back to their shareholders, which is great. You can buy back some of their stock. You can buy other things, which is exactly what I'm going to be doing here real shortly. Again, this company's going to be paying in January. I'm going to go out, obviously pay taxes out of that, and then go straight into buying. But I'm also going to be buying a lot of these things here real shortly as well, just with some other cash that I have sitting aside. And then the last one that I want to talk about is WMC. This is another REIT that I've been talking about. So WMC is their ticker symbol, but they're called Western Asset Mortgage Capital. Really struggling right now, but I do believe with the economy coming back, there was a hotel that literally was going to open March of 2020. Obviously, we know what happened there. Wasn't anybody's fault. Obviously, the hotel that was signed on wasn't able to start paying, their payments, and obviously they didn't open up for a long time. So it was new. Hotels just gotten beat up. A lot of hotels had got beat up through this virus, and I think if they can get, and there's a couple others too that are really waiting on them. Again, this is another one that pays a high yield. This one's like right around 11% right now. So fairly high risk though. I'm not going to lie. That one, but it is cheap. I do believe right now it's like paying, a share is like $2.20 a share. So again, this one's fairly high risk, but I really like the trajectory. If they can get a couple of those loans figured out, have a lot more cash on hand, be able to go out, buy some other assets, maybe even up their dividends slightly, which is kind of what you want to see as a REIT. Pay back their shareholders as much as you can. And so, again, I want to be honest about this as well. Just some speculation. Some ones to watch, I guess you could say, is crypto. So crypto coins. So the three that I really like to watch is Ethereum, Bitcoin, obviously, and then Dogecoin. Those are the three that I really like to keep my eye on. You look at a lot of the big people that are on crypto, and I know Elon Musk is pumping Dogecoin a lot, but again, Dogecoin actually has quite a bit of people accepting it, companies accepting it, so it's definitely not really 100% joke, and I like it. But obviously, Bitcoin and Ethereum, those are the other two big ones, and if they drop quite a bit, which I'm seeing a lot of analysts predicting, actually, these, like Bitcoin, for instance, could go below 30,000 again. I hold it at 28,000. So if it can come all the way back down there, I'll definitely be buying some more, trying to load up a little bit, and hopefully we'll see what happens. But I'm big on crypto. But yes, those are the ones that I just want to recommend. Thanks for watching, and see you next time.